Hi class, this is your instructor, and I thought we would go over some of the highlights out of Chapter 5. We're going to learn how to make adjustments to some of our accounts and complete a worksheet. And the worksheet is just a tool or a form that we use to gather all the data that we need at the end of the accounting period to prepare our financial statements. And you'll notice on this worksheet we've got the trial balance section, which has the account balances at the end of the month in all of your accounts. We have an adjustment section that we're going to use because sometimes, transactions occur. They're easy to recognize. We pay the rent, we pay the utility bill, the customer pays on a bill they owe. Those are transactions that are easy to recognize, and we journalize and post them as they occur. But sometimes changes arise from the internal operations of the firm, and we need to make some adjustments to our accounts. For example, when we buy supplies, we debit the supplies account. But during the month, employees have gone back to the supply cabinet and taken things out of the supply cabinet, and supplies have gotten used up. So without making an adjustment, that supplies account will be overstated. Same with equipment. We buy equipment and we record it at the price we buy it at as an asset, but as we use the equipment, we experience some wear and tear, and it loses some of its value. And so we need to make an adjustment for depreciation, or the loss of value of the equipment as we use it. And any other prepaid expense, if you prepay insurance or prepay advertising, as it gets used up, we're going to try to move some of that amount, the amount that got used up, down to the expense section. So I thought the easiest way to show you how to complete the worksheet was just to do one that's at the end of the chapter, and it's problem 5.4a, Palmer Creative Designs. And I already filled in the balances that I had in the accounts at the end of the month, and that was just given to us in the problem. And the next step is to make some adjustments to those accounts to make sure that the account balances are exactly right before we prepare our financial statements. So the first adjustment says that supplies were purchased on January 1st, 2013, and the inventory of supplies at the end of the month on January 31st is $1,100. So we look at our supplies account and we see that when we originally purchased supplies at the beginning of the month, we spent $7,750. But now what we have left in the supply cabinet is $1,100 worth of supplies. So we used up a certain amount. So I'm going to say 7,750 minus the 1,100 tells me that I used $6,650 worth of supplies. So I'm going to reduce the supplies account by that amount. So I'm going to come over here into the adjustment section, and I'm going to credit supplies for $6,650. Now, in the adjustments, every time I credit something, I have to debit something. So I'm going to go down here to supplies expense, and I'm going to record a debit of $6,650. And since this is my first adjustment, I'm just going to label it A on both parts there. All right? So that's our first adjustment. The next adjustment says the prepaid advertising contract was signed on January 1st and covers a 4-month period. So if I look up here at prepaid advertising, I see that I have $8,400 in there. Now, if that was for a 4-month period and now 1 month has gotten used up, I'm going to divide that by 4, and I find out that $2,100 of it got used up. So I'm going to credit prepaid advertising. It has a debit balance right now. I'm going to credit it for $2,100. I'm going to label it B, adjustment B. And then I'm going to go down here to advertising expense in the adjustments column, and I'm going to debit it for $2,100 and label it B. $2,100 of my advertising contract got used up in the month of January. All right. My next adjustment, it says that rent of $1,600 expired during the month. So if I look up here, I see that $19,200 is in the prepaid rent account. So I must have paid about a whole year. So I'm going to take $19,200. Well, actually, I don't even have to figure that, but let me divide that by 12 just to see. $1,600. Yes, I must have prepaid the rent for a whole year, and now $1,600 worth of rent has expired. 1 month, the month of January. So on the prepaid rent account, I'm going to credit prepaid rent for $1,600. And I'm going to label that C. And then I'm going to come down to the rent expense account and debit it for $1,600. And label it C. $1,600 worth of rent has expired or gotten used up. Now my last adjustment is for depreciation. And it tells me that I'm using the straight line method, and the equipment has an estimated useful life of 10 years with no salvage value. So I look up here at the equipment account, I see that I spent $21,600 for equipment. What I'm going to do, since it has no salvage value, that what I'm saying there is after 10 years, I don't think I can sell it for anything. I'm going to take $21,600 minus 0, which is still $21,600, and I'm going to divide it by the number of months that I am expecting to use this piece of equipment. It tells me I'm going to have a 10-year useful life. So 10 times 12 months gives me 120 months. So I'm going to take my $21,600, divide it by 120 months, and it tells me that my depreciation for the month is $180. What they're saying there is that because I used the equipment during the month, it lost value of about $180 for the month. I'm going to keep track of all depreciation in this account called Accumulated Depreciation Equipment. It's a contra asset account. It always sits with equipment, and every time I record depreciation, I'm going to record it in this account. So I'm going to go over here and credit accumulated depreciation $180. I'm going to label that adjustment D. And then I'm going to go down to depreciation expense and debit it for $180 and label it D. And that just tells me that $180 I've lost in value from just the use of my equipment. It's a non-cash expense, but it's a real expense because it costs the company, you know, in value. All right. Once I get my adjustments recorded, I just have 4, I'm going to add up my adjustments in each column. And I have $10,530 total in both columns. Since my debits equal my credits, I'm ready to move on to the adjusted trial balance section. Now what I usually do here is put a piece of paper across each line, each account, and I just sort of add and subtract across, bring my new balances over. So cash started with the $35,500 debit balance with no changes, so I just bring that balance over. Accounts receivable started with $12,600 debit balance, no changes, so I'm going to bring that over. Supplies started with $7,750. We used up $6,650 because it's a debit balance and a credit adjustment. I subtract my numbers, and I have a $1,100 debit balance in the supplies account, which is what the book told me I had on hand at the end of the month. Okay, prepaid advertising, I started with $8,400 and I used up $2,100. So I have $6,300 left over in my advertising, prepaid advertising. Prepaid rent started with $19,200 and $1,600 of it got used up. So that leaves me with a balance of $17,600 in the prepaid rent account. Equipment, we just leave it at the value that we purchased it at. So $21,600, no changes. I'm going to bring that number over. Now, accumulated depreciation started with no balance, since this is our first month of operation. And now we have a credit adjustment of $180. So we're going to bring that over to the credit column, $180. Accounts payable had no adjustment, so I'm going to just bring that number over to the credit column. And the capital account had no adjustment, so I'm going to bring that over to the credit column. The drawing account had a $7,000 debit balance and no changes, so I just bring it over. And the fees income, $47,600 credit. Okay, now I look at advertising expense. I had no beginning balance, but now I have a $2,100 debit. So I'm going to 0 plus 2,100 is a $2,100 debit. On depreciation, I had no beginning balance, and now I have a $180 debit. So 0 plus 180 is a $180 debit. Rent expense had no beginning balance and a $1,600 debit adjustment. So my debit, $1,600 is brought over. Salaries expense started with $9,700 with no changes. So we leave that in the debit column. Supplies expense had no beginning balance and a $6,650 debit. And utilities expense had a $1,400 debit with no changes. So I brought over my new numbers. These are the numbers we're going to be using now for my income statement and my balance sheet sections. And what I need to do here is add up my debit column, add up my credit column, make sure they balance, and if they do, I'm ready to move on. And I'm not going to take the time to add those up, but I'll stop here and pick up the next video to talk about how to prepare the income statement and balance sheet sections.